Hello, everybody. Thank you for joining in. We'll probably wait for another minute so that more people can join us, and then we'll begin. All right, I think it's time that we can start slowly beginning. So welcome. Thank you for joining the Colliers webinar on Q4 of 2022. Today, I'm in a great company with three of my colleagues, and we'll be covering all the major commercial real estate segments one by one. So we'll be talking mostly about the numbers, the volumes, the major deals, and of course, some future forecasts, and most importantly, the trends and the market sentiment. All right, without further ado, I think we can jump to investments. And speaking of investments, it has been an eventful year. A lot of things have happened, a lot of bad has happened. So very dynamic year overall, but indeed there's a lot of things to be positive about and look forward to. But why don't we begin with the elephant in the room? And it is that due to the highly uncertain economic environment, characterized by what we have is the high inflation, energy costs, as well as more unfavorable terms of financing. Because of all these things, the Q4 for most has been a cautious standstill and planning period, during which investors and developers chose not to start new projects and became very calculated. But despite the uncertainty, the real estate market in the Baltics once again proved to be fundamentally sound, and therefore large investment transactions were still going through. In fact, two of the biggest deals of 2022 were finalized in Q4 and for prime deals. So now looking at the bottom right corner of the presentation, you can see that out of the three largest deals of Q4, we have one in each Baltic states. Firstly, on the left, we have a retail portfolio of 17 properties anchored by Vilnius Prekyba Group stores Maxima and Ermitažas. So grocery and non-grocery DIY construction goods. This deal spans across 12 Lithuanian cities: Vilnius, Kaunas, Klaipėda, Alytus, Šiauliai, and others. It was a shared deal where NDX Group, a Lithuanian-based company, acquired two companies managed by a Norwegian company, EECP. Then secondly, we have Place 11, which was the largest office deal of the year, based in Riga, Latvia. The office was acquired by East Capital, a Swedish company, from Hanner, which is a Lithuanian developer, for 53 million. This office is a very sustainable building, has a great location in the business district Skanste, and indeed a great deal. And last but not the least, in Tallinn, Estonia, Forum Center, a mixed-use development, so retail and offices, which was bought by US real estate from Forum Valduse and Forum Invest, as the company already owns real estate in the area, including Rotterdam Quarter, located between the Old Town and Port of Tallinn, which is a beautiful area and definitely worth a visit if you're ever in Tallinn. So the overall goal of this acquisition was to make the area more complete, unified in terms of the design language, and also convenient for people. And when we look at the investment volumes at the top right corner, of course, it looks solid. It's not the record-breaking last year's numbers, but it is important to mention that the top 10 deals of last year amounted to more than half of the total volume. So we see that this almost 1.3 billion is, the top 10 deals made up more than half of it. And the overall investment transaction activity in both the commercial and residential property markets decreased significantly in the Q4. However, the price expectations have been very slow to adjust. And therefore, and this is very important, we foresee a yield correction in the first half of 2023, especially in the retail and office markets. Industrial is the most competitive at the moment, but more on that later. But this is definitely necessary to adjust for the new financing environment. And this has already been taking place in larger and more established markets such as Poland and Germany. And for example, in the UK and the US, the correction happened in the range of a full percent. And we don't see the upwards push as high as 1%, but it's gonna be close to that. It is very vital because in the short term, money will be flowing where the correction has already happened, and we don't want to be missing out on that. So this is a very crucial step in the first half of 2023. Also, of course, one of the big hurdles is that many investors had gotten accustomed taking Euribor completely out of the equation because it was in the 0% territory. But now it's making a statement, a big statement, I should say, by being in the 3% territory, which has made investors reconsider their financing and investment strategies. Because many of the prior calculations no longer add up and make sense. And crucially, assets that were bought for prime yields will be challenging to refinance because prime deals, as we all know it, were happening with yields below the current rate of borrowing. And we see that the rate of borrowing will only go up. So this is a crucial thing to keep in mind. Also, on a more positive note, but or a more optimistic note for the next year is that due to the slowdown of development activity, the construction prices have now stabilized and will most likely decrease during the first half of 2023, which might encourage more construction activity in late spring. So out of that, we can conclude that some of the projects that were put on hold might become active, and with that also additional investment objects in pipeline, which we're all very much looking forward to. Also, due to increase in borrowing costs and housing affordability falling, many people, many investors and developers are now looking towards the residential rental, co-living and student housing as a very potential market, because many people will much rather choose rental apartments over buying in this environment. So this is definitely a hot and booming market, which we should all pay a lot of attention to. And I think this is also has been proven to be very successful in the Western economy. So this is also coming to us. And on a more positive note, we believe that the existing uncertainty will be replaced by a stronger economic confidence and more stabilized environment in perhaps already the second half of 2023, when consumer prices, the prices of consumer items are believed to decrease and the rate of Euribor is believed to peak and expected to settle. Conclusively, we see that the Baltics real estate market is very much alive, and the professional community has proven their ability to adapt their strategies in times of challenge. And we see no reason for it to change. With that, I wish everyone a fruitful year ahead, and that's it from my side. Thank you. Next up is Olga with the office segment. Olga, take it away.
Thank you, Roland. Thank you. Hi, everyone. I'll be happy to lead you through the office segment today. So let's not waste time. Let's dive in. And we will start from the supply. So fourth quarter of 2022 was quite active in terms of commissioning of the new buildings in Estonia, in Tallinn, with the 7 buildings delivered to the market by the end of the year, making total amount of 47,000 square meters of new addition. And it was not that active in Riga and Vilnius. No buildings commissioned by the end of the year in Riga, and 1 building with 8,000 square meters commissioned in Vilnius. However, there is a strong pipeline of the construction for 2023 and 2024. Most of the projects under construction will be delivered to the market next year, 2023. In total, almost 264,000 square meters of the office space to be delivered. And in particular, it will be around 28,000 square meters in Tallinn, 116,000 square meters in Vilnius, and 120 in Latvia, in Riga. And you can see it on the graph. And what we can see from 2023 forecast, that it will be very sufficient addition to the market in Vilnius and in Riga, and slightly less space will be added to the market in Tallinn. However, Estonian pipeline expected to be delivered more in 2024. So it will be under construction in 2023. And competition for anchor tenants based on this remains strong, a little bit stronger in Riga, as Riga is slightly less active in take-up than Vilnius. However, we see that when the time frame or timeline for delivering of the project is coming closer, the competition for the anchor tenants and bigger pre-lease deals is rising. If we're talking about the demand, then there are positive news and there are slightly more negative news on the demand side. So the market is observing several significant pre-leases, and those pre-leases are mostly driven by desire to increase the quality of the space. And if we take a look to the table with notable lease transactions from fourth quarter, then we see that in all 3 capitals, there were significant pre-lease deals signed. And these are quite early stage pre-leases. That's why even some companies cannot be named until now. So we see 4,500 square meters deals signed in Riga, in addition to Verde, Building B tenant mix, and 3,200 square meters is taken in Vilnius in business center Artery by Visma. And also significant pre-lease in Tallinn. We see 2,000 square meters took by telecom company nearby the city center. So the market is quite active, which is positive. From the other hand, there are some negative sides of the rising energy costs, of the uncertainty in fit-out expenses and fit-out contributions. And these are the main obstacles for decision makings for some companies. So we actually observe that some of the processes and transactions were put on hold until the spring. And we expect these processes to be postponed to 2023. And waiting to work on deals, transactions, and observe what is happening, what will further happen. And from trends and forecasts, the main switch maybe in demand is that those relocations are not driven by the expansions anymore. So work from home policies and all this remote work is hosting the expansion plans of the companies very well. So the main driver of the relocation is actually the increase of the quality. And this should be taken into account by the landlords and developers, what they can offer to the organization from the quality perspective. It's not about the square meters themselves anymore. And another hot topic for actually, which we see hot topic for 2023 is indexation. Already now discussions between landlords and tenants are arising around indexation policies, and we forecast that this will be one of the major questions in between of the parties during the next year. And another interesting observation from the market, together with commissioning of the new projects already during this year and of course, during 2023 and 2024, is that the quality of the project within one segment, for example, A class or B class, will be very different. So there will be a rising gap in between of the quality of the products within one office segment. And this should be taken into account from both sides, from the landlords and also from the tenant side, when we are evaluating the market, when we are evaluating the products, and when we are selecting our plans. This should be looked through carefully. I would say this would be it from the office segment, very short. If you are looking forward for more numbers and more details, the report for Q4 will be published very shortly after our webinar, but I will give the floor to my colleague Eugenia, who will lead you through the retail segment. Thank you.
Hi, everyone. We are continuing with the retail segment, and actually inflation, discounters, and the closures are the most popular words of the end of 2022. As you may see, according to the graph in the right side of the presentation, so actually this is one of the hot topics at the moment, which actually already touched Olga. So the main question for all landlords remain the same, what to do with the indexation, because in Latvia, the indexation rate reaches 17.3%, in Lithuania 19.7%, and in Estonia 19.4%. And we see that currently we reach the highest peak, actually, not only during the last 20 years, but also in the history. And we see that this is a very important topic, not only for the landlords, but also for the tenants on the market. We see that the landlords actually split among following opinions. One of them part are considering that they would like to try to index the rents at the fully, which actually right now we see that it could bring a lot of controversial issue. The second part of the landlords, they are still not so optimistic, and they are accepting the fact that they will not index the rents, or they will split the indexation among following years, 3 years or even 5 years. And the last part of the landlords, actually, which is also trying to find some balance between the tenants and the landlords, and trying to exchange the indexation for some other terms of the lease agreement, which seems very important for them. As for example, they're trying to agree with the tenants for some medium indexation, but trying, for example, to prolong the unbreakable term of the lease agreement, or overall the lease agreement term, or some other essential conditions of the lease agreement. How it will end with the landlords and the tenants, I think we will see already in the end of this quarter. So I very hope that the next webinar, we could start with some summary, how it was. And actually, maybe we'll try to look actually how the market also changed with the last implementation of the indexation to the rents. Continue with the shopping center, we may see that the shopping center, they continue the diversification of the tenant mix. Education, medicine, entertainment, then discounts, new opening, this actually remained very important topic in the last year. And actually this leads also to the situation that we see that the pure retail space already transformed to some multi-use. And if regarding this trend, we have discussed the possibility in the last year or 2 years ago, that actually in the end of the last year, we already saw those new changes in the life. Discounters like outlet center like Rademar, Denim Dream, or some fencing sport activities, special clinics for the adults and the other events become a new breed of Tallinn shopping center T1. And actually they declared that 2022 was the year of the major changes of the shopping center. Those changes we already observed in the last year in the last quarter. And actually, it becomes very positive that, again, the pure retail space transformed to some other activities. And it leads to the situation that the retail itself become much more broader as it was 3 or 5 years ago. Right now, we see that the retail is not only about the shop, but it's all about the education, medicine, some other activities. And this trend will remain the same also for this year. Following this approach, also we see that the Virutescu shopping center, they finally opened the health and medicine cluster in the upper floor, and also was happy to share the news regarding new openings of the shopping center, like opening of the Jim Malone store, the Karl Lagerfeld Pinka, and the other. The same trend we also observe in the main shopping center in Lithuania, in Latvia, that the shopping center was improving their tenant mix by the new openings. On the contrast, in Riga, we could mention that the ex-Prisma store was reopened with a fully new concept and also with a bit different retail approach, because the main anchor tenants of the shopping center is the farmer market, which already have one location in the left bank of the river, and they decided to cover the full Riga, and right now opened as the anchor tenant in the shopping center August, which actually have been opened in November. Additionally, there was opening the Sinsay discount offer brand and the Lemon Gym. We see that currently the reopenings with the new concept also will become a trend for this year. Discounters continue to roll the Baltic countries. And in Lithuania, we may see that already in the second quarter of this year will be opening retail park Una near the Vilnius, where the concept will be based not only on the discounters and the grocery, but also will be there that the house, the beauty, and partly of the everyday needs. But nevertheless, what we heard from the discounters that they are not so optimistic about current year. They told that they have become very careful about the choosing location, about the right tenant mix, and about the openings. And additionally, we saw in the last year some newcomers, which actually also very positively influenced the overall market. Domino's Pizza, they continue their expansion in the Latvia, opened the first location, and continue expansion in Lithuania and in Latvia as well. Also, Miniso announced that they will be opening in the shopping center Kup in Lithuania. Very soon, they will plan also to expand. However, we don't know yet still the pipeline at the moment. Some local brands was very focusing of the opening last year, and actually we see that this is very time for the local brands to expand. However, also we saw that the last quarter actually dramatically ends with some big closures on the market. Especially it was focused on the Latvian market because the Kankan Pizza announced that they will close all locations in Latvia, which is around the 10 locations, which will dramatically influence the restaurants area and also the vacancy of the retail segment. As well as the accessory store also announced that they are exiting the market. It's very unusual for me to finish the retail segment with some sad news, but I thought that in this year, all closures could bring us the new opportunities. So let's see what opportunities we will face during this year, and we will exchange with some retail news in the upcoming quarters. And right now I'm giving the floor to my colleague from Lithuania, Regimantas, and he will update you on the industrial segment.
Hello, everyone. So, warehouse market has started 2022 with a concern about already low and decreasing vacancies, and mostly due to growing disbalance between demand, which was already taken up, and the supply, which was still struggling due to raising already high construction costs and still disrupted supply chains. What it turned out, it wasn't our biggest concern. And already, obviously, the war, with all its consequences, has made huge direct and indirect impact to our market. In numbers, that meant that around 30% of already struggling pipeline has been postponed by the developers. In Tallinn, that amounted to more or less 20%. In Riga, about 30%. In Vilnius, which was probably seen more as speculative developments, 35%. And in Kaunas, more or less as planned, mostly due to all the projects already developed for build-to-suit or build-to-own purposes. The take-up in the market has shrunk about 35% in the whole Baltics, and to some extent, of course, due to limited free space, but also significantly due to the companies postponing the decisions due to uncertainty of the future, uncertainty of the on the development level, or the market development levels, and so on and so forth. So basically, what we can say, we've lost more than a quarter of the plan of 2023 along the way of the year, and we actually approached the end of the year with no strong expectations and closed it evidently really modestly. So what you can see in the graph on the top left corner is basically only completions of stock offices has relatively stood out in the last quarter, and in Tallinn it has been done by a couple of bigger projects. So one of them, Iru stock office by Favorte, and in Vilnius mostly smaller projects that has been just smaller multiple projects. Besides the stock offices, we've seen only one or two speculative and build-to-suit, build-to-own type of projects, but not of significant size. On the other hand, what is positive that we have seen throughout the quarter continuous and even new plans of some major or ambitious developers to build the land bank, which means that which actually was evident in all the mentioned cities from Tallinn to Kaunas, and this means that or allows us to presume that the future of the pipeline will not be disrupted in 2024, maybe even 25 and 26. Also, in the last quarter, we've seen stabilizing rent levels and construction costs. For rents, it was actually mostly influenced by slowing demand in form of, as I said, postponing decision making due to uncertainty of energy costs and overall health of the economy. As for construction costs, they have stopped growing and to some extent even decreased, but on the other hand, they still remain high, which still impacts all kind of specific projects, mostly in the way of slowing down build-to-suit, build-to-own type of projects due to not strong and not attractive business cases, as well as individual speculative projects by developers that has not have experience to do that before. And for the future, what to expect for 2023? The good thing is that development looks stronger than the previous year, and that you can see in the graphs of in the top middle and top right corner. Just pay attention that the axis, then the values of the axis, they're different. So what we see, Tallinn, as more or less usually in the recent years, is driven and probably going to be driven by stock offices and build to suit, build to own type of projects, and not significant speculative development, which is probably a bad news for some smaller tenants that are not ready for build to suit type of projects. Riga, again, build to suit and build to own, but a bit more of specific speculative development. On the other hand, we don't see this number as sufficient. And for Vilnius, it looks rather strong with quite attractive levels of speculative development, and but still dominated by build to suit and build to own type of projects. As of for Kaunas at the moment, we see that it's not much being under construction. On the other hand, when you look at the future pipeline currently in the planning phase, it looks rather promising, and the projects behind those numbers, behind those graphs, seem to be quite sustainable. So we believe that 2023, 2024, and 2025 will be rather active for Kaunas as well. For the rents, we don't see that. The big reason for future growth, mostly due to the still uncertainty how active will be the demand. We see that the beginning of 2023 is already much more positive and promising compared to the end of the year, which was really, as I said, with low expectations and big uncertainties for the future. And now we see that decisions, at least some of the decisions, comes from the on hold status back to the active status. On the other hand, the whole development of the market will really depend on all the economies that impact our region. And as we all know, it's not yet for granted how they will perform due to all the factors like still growing interest rates, inflation, slowing down consumption, and so on and so forth. So at best, we expect good, healthy demand, but for sure, not some record year for 2023. So yeah, that's how it looks from industrial and logistics, mostly from warehouse market, and that's it. That is it from us, from Colliers for today. I really want to thank you all for your attention. The webinar has been recorded, and it will be sent out to all of you together with a quarterly report tomorrow. If you have any specific questions, of course, feel free to ask any of the experts you can see on the screen. And to all of you, I wish you a good rest of the day and the year that can be better than you expect at the moment. So thank you again, and goodbye to everyone.